Moneymakers, welcome back to another live edition of Taking Stock. I'm Kalilah Reynolds, and we're bringing you all the latest business news and telling you how it's going to affect you and your money. Well, R.A Williams is finally taking the leap into the public market with its IPO. The announcement came after years of contemplation. So long they wanted to do it, it's finally here. This IPO could be a game changer for the company, but will it be a smart investment for you? We'll break down the prospectus to give you the insights that you need. But before we get to that, don't forget to hit the like button and subscribe to this channel. And of course, let me know in the comments where you're joining us from, what part of Jamaica or what part of the world. Now, here's a look at what's coming up in tonight's show, followed by what's hot in business. And come on, let's get this money.
On this episode of Taking Stock, R.A Williams is going public. The pharmaceutical distribution company is seeking $400 million through its initial public offering. What are the offer details? How will the proceeds be used, and what's the company's current financial health looking like? We break down the prospectus, and the company's owners join us live to discuss. And the analyst weighs in on the latest market developments. Growth drivers in the healthcare market. What are the latest investing trends?
Here's what's hot, brought to you by JMMB Group, your best interest at heart.
Pharmaceutical distribution company R.A Williams has announced an initial public offer of its shares. The company operates a chain for pharmacies across the island and distributes pharmaceutics to other pharmacies and hospitals. The company is offering 400 million shares priced at $1 each for sale. The offer opens on July 17. Separate subsidiary A.S. Bryden has acquired a majority stake in local food and beverage distributor Caribbean Producers Jamaica. The deal reportedly cost the Trinidad-based company $5 billion Jamaican dollars. A.S. Bryden now has a 44.8% stake in CPJ. The deal will see A.S. Bryden expanding their regional distribution footprint to Jamaica and St. Lucia. Separate CEO Richard Pandohi will replace CPJ co-founder Mark Hart as chairman, while CPJ's other co-founder Tom Tyler will be appointed deputy chairman. Both Hart and Tyler will remain as directors of CPJ. The Bank of Jamaica has suspended Paymaster as a remittance service provider until further notice. That means Paymaster is no longer authorized to offer remittance services as a primary agent at its 19 locations island-wide. However, the company is still authorized as a sub-agent for other remittance agencies. That means customers can visit Paymaster locations to use remittance services like MoneyGram. In a statement, Paymaster said the suspension was a result of a system error caused by an overseas service provider. It is not clear how long the suspension will last. Citi, one of the largest banks in the United States, has announced it will be leaving Haiti after 50 years. In a statement, Citi said it would pursue the voluntary surrender of its banking license with the approval of Haiti's central bank. However, international banking and correspondent banking services will continue for existing clients. The company said its decision to leave Haiti was made partially due to diminished international activity and lower institutional client demand in the country. The 2024 Paris Summer Olympics is expected to be the 6th most expensive Olympic Games ever. The Games, which are scheduled to begin on July 26th, are estimated to have cost France $8.2 billion to execute. The 2014 Winter Olympics in Sochi were the most expensive ever, costing nearly $25 billion, followed by the Summer Olympics in Tokyo, which was originally planned for 2020 but was delayed because of the COVID-19 pandemic. Expenses include stadium reconstruction, opening and closing ceremonies, and operational costs like food service and labor force wages.
So guys, there's a new IPO out. R.A Williams is a pharmaceutical distribution company and they're looking to raise 400 million Jamaican dollars. If you've always wanted to invest in an IPO but you weren't sure what to look for, take my Investing for Beginners Masterclass. Let's get this money. Welcome back. Welcome back. Let's see who is joining us and where you guys are from. Let me know in the chat. We got Rodcliffe. Shout out to Rodcliffe in Portmore. We have David in Mobay who says warm up and ready, saying with the let's get this money signs. We have Sean who's ready and waiting. Finessing Finances sending greetings and reminding people, of course, to like, subscribe, and share the video. We got Roger over in Philly. We got Christopher in Portmore, Jermaine hailing all the way from China, Deshaun in Negril, Richard in St. James, Jackie in Kingston 7, Shardine in St. Thomas, Ingrid in Bull Bay, people all over the place, JT's in Cayman, and Lati in Mexico, Jamaican watching in Mexico, Kish, of course, joining from London as usual. So let me know in the chat where you joining us from this evening. So the big news today, R.A. Williams has announced its IPO, and that's a move that we saw coming since 2022, thereabouts. Saw the article in the newspaper and all of that. Well, today we'll be looking at how this company, this public offering, will reshape the company's financial landscape, and we also want to look at its investment potential. We're joined actually on set for the first time. I've never done taking stock in this studio with a guest, so you're the first.
All
right. Welcome to CEO of R.A. Williams, Audley Reed, and we're also joined by Sagicor Investments Manager of Capital Markets, Stuart South. Welcome, Audley. Welcome, Stuart.
Thank you, Kalilah.
How are you guys doing?
Thank you, Kalilah.
Great to have
you.
Fine.
Energized to get this off on the road, you know.
Mm-hmm. All right, good. No, you don't need to move. You don't need to move.
I'm good.
Yeah, you're good. So unique, you might just need to use one of the different, so like this one. Yeah, one of the different formats when we're side by side. So welcome, Audley, to the show.
Kalilah.
I want to start by you telling us about how this company started, because you're a fairly young guy, family of pharmacists. Your mom, your sister, all you just came together. Tell me about the background of R.A. Williams.
Well, the story of R.A. Williams, it started in Chapelton, Clarendon. Our mother, the family was operating a retail pharmacy in Chapelton, and we were servicing mainly persons from the community. It's largely a farming community. That's the main economic activity from the communities in and around Chapelton. And there is a hospital close by, the Chapelton Hospital. And we noticed that even though we were stocking the most affordable generics at the time that were available on the market, our patients were still struggling to afford their medication therapy. Persons would come in, they'd buy 3 days supply of their treatment. Some persons would do a week, 2 weeks, and so on. And the idea came about out of that, a passion, a desire to serve people, to serve, the community. And we also looked at the scalability of the business at the time, and we realized that our desire for growth, was much bigger than just that community. We wanted to have a wider impact, because we are pharmacists and we believe that we can have an impact in a big way. So we started discussions because the space was available. Can we look to pharmaceutical distribution to have a bigger impact on persons who are having challenges affording quality medication? So that's how the discussion started back in 2009, 2010. And the business was registered. And we officially opened its doors while my sister and myself were in our final year at UTech.
Oh, wow.
In March of 2012. Yes, we were still in school in March 2012, but we still forged ahead because we saw an opportunity. One of the products that we would have worked to get registered while we were in school, it was approved. And upon getting that approval, we also realized at the same time that the Innovator brand, which was the only one available in that form of treatment, was out of stock, not available on the market. Because we were doing community externship in pharmacies in Papi nearby, Goodwill Pharmacy, and we saw a lot of prescriptions coming in for that drug, and we just weren't able to fill it. So myself, Mom, and Joel, we got together, had a discussion, and boom, we opened the business in March 2012 with one pharmacist as the single employee.
Which one of you was that?
No,
Your
it
mom?
wasn't any of us because we weren't still in school and my mom was living abroad at the time. So we employed a pharmacist, Melissa Sims. Hi, Melissa, if you're listening. And yeah, that's how we started. And we expanded since then to now where we're trading over 130 products. The company has been so attractive to international players that now we have agreements with over 10 international partners. We recently onboarded two new pharma companies, Rivis Pharma out of Ontario, Canada, and Forts Pharma, another Indian company as well. So we've been growing very, very nicely, steadily as well. Revenues moving from under 30 million in 2012 to now where this year, April 30 or year end, we hit 1.5 billion in revenues. So
amazing.
We've seen growth.
And this is year 11, year 12 now?
Year 12, moving into year 13. We've seen growth. And the good thing about it is we are so energized and excited because we see that there is still immense potential for further growth when we look at all the numbers and when we look at the market on the whole. So we're going to be working and we are hoping and expecting to welcome new investors on board with us so that we can get together and have a bigger impact on the Jamaican pharmaceutical landscape.
So your mom is Evelyn Williams.
Yes.
Your sister is Jewel.
Jewelry.
You're
yes.
Audley.
Yes.
Who's the R.A? R.A Williams.
That's our grandfather, mom's dad. Yeah. So Ransford Anton Williams, company is named after him in honor of his blessed memory. He was very instrumental in our upbringing. He had a very significant impact, encouraging and ensuring that we all went to school and we focused on education, because his view is that that was the only way to lift us from where we were and to empower us to be able to achieve any kind of dream or goal that we set for ourselves. So we were very happy for his influence on our lives, instilling good values in us as well. And so we thought, in honor of him, we would name the company after him.
Lovely. Any relation to the famous R. Danny Williams? Because I saw he was your chairman at one point, right?
So the name of the company wasn't conceptualized with R. Danny Williams, but the soul of the company embodies everything that who R. Danny Williams was. He was a man of integrity. He was.
But are you guys related?
We are not related.
How did you pull the R. Danny Williams to chair your company in year 3?
I don't know if it's so much that I pulled him. He has an eye for individuals who show great promise. And he's always encouraged and motivated by that. He likes people who, embody values that are consistent with who he is, integrity and just being honest and hardworking. And I believe those are some of the qualities that he would have seen in me when I met him at JC in my last year, 2006. And he has never left my side since then. So he's always been my mentor since then, kept very close, encouraged me to finish pharmacy school, and said to me that the business will come, because I was hungry for entrepreneurship. I was very involved in the
But why did you study pharmacy and not business?
Being in the pharmacy with our mother, it became a passion of mine. It was very fulfilling for me, helping her, dispensing to patients and talking to them, interacting with them, counseling and passing on information that was impactful to their healthcare. We realized, being in a rural community, that a lot of persons, though they're taking medication, sometimes they don't know why they're taking the medication. And so that kind of an impact motivated me and inspired me to serve. And I found my calling, and I believe it is in the most noble profession of pharmacy. So that is why we chose pharmacy.
That's awesome. And now the majority of your staff, or a large number of your staff, are pharmacists, which you believe is your advantage in business, huh?
I wouldn't categorize it at a large number are pharmacists, but quite a few are pharmacists. We have pharmacists on board in various aspects of the business. From the board level, we have over 50% of the board members are registered and licensed practicing pharmacists who have experience in various aspects of pharmacy, manufacturing, distribution, pharmaceutical marketing, retail and community pharmacy, clinical pharmacy, hospital pharmacy. That's the kind of experience that all of us as pharmacists at the board level brings. But we also have pharmacists involved in the regulatory aspect of the business, the marketing, and so on. But yeah, our company has over 70 employees, but the majority, what they are young people.
Mm-hmm.
You know, more than 50%, more than 70% of the staff, I think, are under the age of 35. So we have a very young cohort of employees who are energized, excited, and just ready to serve the Jamaican
I can
pharmaceutical
testify
landscape.
to that.
You can?
So you guys invited me to host your staff event a few
Yes,
months ago. And let me
yes.
say, I was very impressed with how you treat your staff.
Yeah, it's not so much about how we treat them, it's how they treat us and the business. And so they are always at the top of our minds. You always have to give back and pour into persons who pour into you. And the truth is that I don't know if it's because for many of them, this is their first place of employ, having finished school or something, but they're so motivated and dedicated to the business. And I believe they are the reason why we've been able to pull out such phenomenal growth over the last 12 years. You know, those who are currently with us and those who have left as well and gone on to other ventures in their lives. But the truth is, the team members of R.A Williams, those who are here today and those who are no longer with us, have always given their hearts and minds and just their full commitment and energy. And we're forever grateful.
That's exceptional in a company. You don't see a lot of companies that have loyal staff members today. And people always complain about Gen Z not being loyal. They're
Well,
loyal if you treat them right.
They're loyal if you treat them right. You know, people just want to be seen. They want to be heard. They want to feel as if you recognize their worth and you see potential in them. And this is something that I learned from R. Williams and our current chairman too, because this is something that Chairman John Bailey speaks about at our retreat, you know, when we have our strategic meetings and so on. You know, how is it that we can keep people involved, never losing that human side of the business, always having our customers and our team members at the epicenter of every decision, you know. And so that is how we operate the business. That's the culture of the business. That is the embodiment of what and who R.A Williams is.
You spoke about in R.A Williams' origin story about how a lot of your customers couldn't afford the medication. So is it that your value add to the market is that you come in at a lower price?
It is a part of our value added. As pharmacists, we have a unique perspective and insight into the industry. We are able, based on our experience and practice, to identify what exactly the gaps are and where they are. That's how we entered the market, when we identified a gap in 2012. And that is how we've continued to grow. So beyond price point, which is a key factor, we also focus on where is it that there is a most critical need. And so those are the two main things that allow us to set ourselves apart.
You know, you're competing with the big boys. It's a very crowded industry. You have Lasco distributors, decades in the business. Indies Pharma also listed on the stock exchange. You have who are some others? You have some big names.
You're calling them, you know them. Some very big names.
I saw it in your prospectus. Yes. But what really sets you? That's not the question I want to ask. I already asked you what sets you apart. How did you develop these relationships with the people who, you know, your suppliers in India and Bangladesh? Do you speak Indian or Bangladeshi?
No.
How did that come about?
Well, the first company we signed an exclusive distributor agreement with was Arista Pharma back in 2010. And quickly after that, like a year after that, we introduced Square Pharma, also out of Bangladesh, an exclusive agreement with Square Pharma, two of the largest companies from Bangladesh. And those relationships came about because we engaged, while we were operating the pharmacy, some other international partners who we would have met. They would have come to Jamaica, they're doing their market surveillance, and they happen to come into the pharmacy, and we engaged in discussions. And so for those two companies, we were connected whilst operating and just becoming noticed in the market based on how we had differentiated ourselves in our approach to marketing and just our performance and growth in the early years. Other companies started to take notice of us, and so you'll notice that our suite of agreements with our suppliers, some are exclusive and some are non-exclusive. So there are other partners who would have been here with some of the larger names that you have mentioned, and for whatever reason, they looked at us, they liked us, they liked what we were doing, and they decided that they needed a second partner to add value and to expand and increase their market share here in Jamaica, and they chose R.A Williams as a preferred partner. So we've been able to expand, particularly because international partners are taking notice of the business and the impact that we're having in the marketplace.
And now you have deals with NHF, so you're with the government, you have supplied how many pharmacies?
Yeah. So at the moment, we are supplying over 700 customers. This customer base includes more than half of it is pharmacies across the island. Over 500 pharmacies we service from Morant Point to Negril Point, right across the island, in every parish, in every nook and cranny of Jamaica, we're there. We also service a lot of healthcare facilities other than pharmacies, some medical facilities, private hospitals, and as you said, we're big in the public space as well. We do have a large contract, over $500 million, with the National Health Fund, supplying some much needed critical drugs in the area of cardiovasculars, diabetes, hypertension, glaucoma as well, ophthalmology products, and IV fluids as well. So whenever you go to a hospital and they put you on a drip, it's quite likely that one of the brands you're going to be saved by is a R.A Williams distributed product. But yeah, we have been developing and strengthening and expanding our relationship with the National Health Fund. We find it to be a very rewarding partnership, because the persons who are served by the public health system are very much in need of these critical treatment options that are available. And so what we are keen on now, having taken a look at the last tender award period, the government awarded contracts totaling $27 billion US dollars, 27 billion Jamaican dollars. And so our stake of that was $500 million Jamaican dollars. So we think this is a critical area that we're going to be keen on focusing on over the next 3 to 5 years and beyond. And we're very, very keen on expanding the business that we do with the National Health Fund.
Well, let me stick a pin right here, because I was supposed to show you guys the recap of the IPO, the overview, and I forgot because I just got so excited to introduce Audley here in the studio. So let's take a look at the overview of the R.A Williams IPO.
Pharmaceutical distribution company R.A Williams is looking to raise $400 million through its initial public offering. The company operates a chain for pharmacies across the island and distributes pharmaceutics to other pharmacies and hospitals. The company is offering 400 million shares priced at $1 each. If the IPO is successful, the company plans to list on the junior market of the Jamaica Stock Exchange. The minimum amount of shares you can buy is 1,000, followed by increments of 100. That means you can participate in this offer for 1,000 Jamaican dollars plus fees. That's less than $7 US. The offer is set to open this Wednesday, July 17, and is scheduled to close on July 31. Sagicor Investments is the lead broker, and applications are being accepted through its e-investment platform. The link is in the description.
All right, welcome back. So I see a lot of interesting comments and questions coming from the audience. So let's get into the use of funds. And Stuart, I haven't forgotten about you. You're going to come in a little bit later and show us the e-invest platform and tell us how people can apply. But right now, I want to get into the story of R.A Williams and not coming up to this point where you are doing this IPO. You're looking to raise $400 million Jamaican dollars, $1 a share, as you just heard in the recap. But reading through the prospectus, looking at the use of funds, a large chunk of that is going to be used to repay debt. So tell us about that.
We're trying to prepare the company for what we are seeing lies ahead, which is we're about to accelerate the growth of the company. And if you're going to do that, you have to reduce the risk, foreseeable risks for the business. And you have to ensure that the capital base of the company is strengthened. Because if you look at the history of the company over the last, I would say, 6 years in particular, the level of growth has been very rapid, especially if you compare us to most of our competitors, even those who are listed. And we have to be strategic about when and how we do what we do. And now we believe is the right time to reduce the debt portfolio of the business. Why? Because it means less interest payments. It means less cash leaving the business. So we're able to hold more of that cash and build our cash reserves. It also will impact the profitability of the company ultimately. And that means, better returns for investors. So we're keen on doing this because we want to strengthen the capital base of the company by reducing the debt portfolio and just allowing ourselves to be in a position to seize any opportunity that comes up. And we're hoping that we can execute on something very soon. But the truth is that to focus on investment opportunities and growth opportunities, you have to prepare. And so we think at this time, the best way to prepare the business is to eliminate as much of the debt as possible. And the IPO at this time is the best avenue to do that.
So is it that debt is what fueled your rapid growth?
It is, absolutely. We're happy for our financial partners and the partnership that we've been able to establish with them over the years. We have been supported. So we've taken on a lot of debt, because a lot of these opportunities that came up, they came up really, really fast. And we had to be in a position to respond. That's one of the things we pride ourselves on in terms of how we've managed the business. We've been very, very agile, and we've been able to respond in quick fashion. And we want to maintain that as we move forward. And the best way to maintain that is to make sure that you're in a position, if an opportunity comes, to respond right away.
I read about how COVID impacted the company, because I would have assumed that as a pharmaceutical company, COVID is a good thing because now people need more drugs, more pharmaceuticals. But you were also adversely impacted.
We were adversely impacted, but we were very resilient through the efforts of our team, as well as the truth, the structures that we had started to build out in the business. Looking at its scaling, we started to improve the business in all areas. And one of the areas that we focused on was logistics and distribution.
Because those supply chain issues hit you.
Precisely. So at the onset of COVID, we were impacted. Our sales in the first month when COVID landed, especially because St. Catherine was one of the first places that was locked down.
Right.
It plummeted to less than 50% of what it normally is. And so we would have had to respond, but the entire company rose to the occasion. We all came together. We all took a pay cut right away, as much as 50% in some instances. And the entire team decided that they were going to rally. We all supported each other. Persons were carpooling to get to work, all kind of things. And it didn't last long, to be honest, because when we heard about the pandemic, we started discussions internally and with our international partners, and we were able to respond to the situation very, very quickly. And the partnership with our financial institutions as well allowed us to expand our inventory holdings pretty quickly. And so we were able to get back in the game. We ended that year profitable. I believe we did. We saw growth. We did over 600 million in sales at that time. And it was the year following that we did $1 billion in sales. Yeah.
Wow. All right, let's take some questions from the audience because I see the chat here lighting up. You guys have a lot of questions. Let me start with Sean. Sean has a whole heap of questions. Do you know Sean? Sean Brown? Sean has a lot of questions for you. He wants to know what percentage of your business comes from government versus public sector pharmacies, or government or public sector pharmacies.
The figure is not at the top of my head right now, but it is roughly around 25% of the business, I would say, that comes from
Public sector.
from public sector. Yeah, maybe a little less, but it's roughly around 25%.
Next question comes from R&R, Richard Reed. If R.A Williams gets the funds, clears its debt, what is to stop the company from getting into working capital challenges again within the near 5-month cash conversion issue?
I mean, that's an interesting question. Working capital challenges again, is how it was phrased, which is almost suggestive that there is working capital challenges now, or before. I just want to
one of the
clear
loans
that
was
up.
for working capital.
It is for working capital, but it is not suggesting that there was a negative issue. So what it was a response to growth opportunities. So I just want to ensure that I clear that up. But how I would respond, RR, is that, I don't want us to perceive that debt is a problem. It is how you manage your debt that is important. And we have always managed our business in such a way that looks at all of the risks, and any decision that we take, we're very calculated, and we do a lot of forecasting and projecting, and we seek advice and assistance from all our financial partners. And I believe that that is one of the reasons why we've been able to have their full support over the years, because we've managed the business in such a way that, one, we're able to service our debts in a timely manner. And, as I said, we're reducing the debt portfolio right now because we want to be in a position that, should an opportunity come, we don't know what is going to be required based on the size of that opportunity that may come. But we want to put ourselves in a position where, if we need to partner with financial institutions again, then that may be on the cards. But for now, what I see is that the company will be focused on pulling out good revenue performances that will allow us to continue to have positive and growing cash flow, cash reserves, and just remaining profitable, and ensuring that we remain on a growth trajectory.
JMR wants to know, what prompted that increase in revenue to 1 billion?
Opportunities. We added new lines, which expanded our product portfolio in 2002. And, that is how the business has continued to grow. In May of this year, we signed agreements with Forts, an exclusive contract with Forts out of India. They are expected to introduce somewhere between 6 and 11, between 6 and 11. I can't remember the exact figure, but I know for sure within this month we're expected at least 2 of those very fast moving products to arrive in the island. So those we'll see the revenues of those starting to impact the company going forward. And we also signed an agreement with Rivis Pharma out of Ontario, Canada. So what you will see is the company continuing on this growth path, as we move forward, because that has been, we've just been attractive to international partners. They've sought us out. We've had discussions, and we're continuing to grow the business.
Let me take 2 more questions from the audience, and I'm going to come to Stuart. So RR again, with the costs associated with training and developing staff, how do you mitigate or minimize the high turnover often associated with a young staff?
That's a interesting question. The truth is that there is costs associated with training, but a lot of our staff we do employ them if they are trained in the area that we're looking for. And we do a lot of internal training. But this is something that we also plan for, because a lot of times we have to bring in experts to do training of the staff. So how do we maintain or reduce staff turnover? We keep them engaged. We ensure that our staff members feel valued. Kalilah was joined us at one of our staff event earlier this year, and so she would have seen firsthand how is it that we go about engaging them. I think that was a change management session with Dr. Nsombe Jaja, because we believe that we have to ensure that we're investing in our people. And so, you know, this is something that we plan for. We when we're doing our forecasting or budgeting exercise, that is an area that is budgeted for staff development and staff training, because it is absolutely essential for a business that is growing and growing rapidly.
Yeah. Next question is from Christopher Johns. Does the company have a medical equipment division? If not, any plans to add that income stream?
Very interesting that this question should be posed. You know, last night we were at the investor briefing, and interestingly, one of our international partner and their principal representative here was present at the briefing, and they posed a question similar to this. We are in talks with international partners who are interested to bring medical equipment to Jamaica. We will see how those talks develop as we move along. But at the moment, I cannot say that, yes, there are plans, but we are in discussions.
You're interested. All right, let's bring in Stuart, because the people are now asking all about how they can apply and so on. Hi, Stuart.
How are you doing, Kalilah?
Stuart is joining us from Sagicor Investments, and tell us how we can apply for this offer.
So thank you for that question. So Kalilah, the offer is available for participation through Sagicor's e-invest system, and this is our revamped e-invest system. We're happy to relaunch it to the public. You can access the website by going to einvest.sagicorjamaica.com. Based on the fact that it's a revised system or a relaunched system, all users, no matter whether you had a profile initially on the old system, you need to register or re-register, and then you'd be able to log in and apply for the R.A Williams IPO. And just to reiterate, the invitation from R.A Williams is for 400 million ordinary shares. It's at $1 a share, and that 400 million shares is split between a number of different pools. One of the first pools is the company applicants pool, which has 30 million shares. That includes shares that are reserved for team members of R.A Williams, for example. You have a key strategic partner reserve pool. That's 160 million shares. That's reserved for the application of key strategic partners of R.A Williams. And then the non-reserve share pool, which is for the general public, that includes 210 million shares. So the IPO opens officially tomorrow, right? It's pretty imminent. It opens tomorrow at 9 a.m. and it is scheduled to close on July 31st at 4:30 p.m. So just to reiterate, investors can apply on Sagicor eInvest. You must ensure that if you're going on the platform, that you must sign up, even if you had an old profile or old login on the previous system. And Sagicor eInvest platform can actually take applications from all active JCSD accounts. So you don't have to be a Sagicor Investments client to use eInvest. It doesn't matter. You just log in, and we accept all JCSD accounts, no matter whether your brokerage account is with Sagicor Investments.
Okay, good. So you don't need a Sagicor account necessarily. As long as you have a JCSD brokerage account, you're good.
Yep.
All right. I see a couple of questions coming in. Directs wanted to know if the account is does it have to be a checking account?
I think he's asking if the account in Appendix 2 of the prospectus, that's supposed to, you're supposed to fund the account.
Oh, gotcha.
Yeah, I think that's, yeah. So yes, it is a checking account.
All right. Let me see if I have any other questions. Will it be on any other investment platforms, or is it only through eInvest?
As of now, the offer is only on eInvest. And yeah, as of now, it's only on eInvest. We don't have any intention right now to bring it on any platform, any other platform. So we think eInvest is capable of accepting applications and the demand that we're going to get from the R.A Williams IPO. Applications have been coming in fast and furious, especially after the investor briefing yesterday. And we think that the system is quite capable and can accept the demand that we expect.
And just to stress, so this is a newly revamped platform, right? eInvest, because you guys had it on hiatus for a little bit. You fixed some issues and now it's back.
Yep. Yeah, so eInvest, so we would have used the older version of eInvest in previous offers. And we had some learnings from that, and we really went back to the drawing board and ensured that we prioritize the experience of the investing public. So the changes that we've made on the current eInvest platform, it really prioritizes the user experience. So it is extremely convenient. You can apply using any JCSD account. It's accessible. It's pretty intuitive in terms of how the application process flows. You can track your applications throughout. I think for the previous platform, a lot of investors didn't know where the applications were. So we've embedded it within this eInvest platform, a number of ways in which investors can track their applications. And yeah, it saves time, because when you look at how many clicks it takes you, for example, to get to a successful application, it's a pretty low number. So just to reiterate, we've put the user first in this new platform, and we really encourage persons to come on, register, and apply for the R.A Williams IPO after reading the prospectus.
All right. So, Stuart, I want to ask you to look at the comments in the chat right now. Some people, you can respond to them individually. Some people say they're still having a few issues, but I just want you to address those later on. Before you go, though, Stuart, why is this opportunity a good investment in your opinion?
So R.A Williams oddly spoke just now about the company's growth. Just going back to the origins of the company is only 12 years old. And in 12 years, it has scaled the business to sales of $1.5 billion. And that is a truly impressive feat. When you look at the structure of the market itself, R.A Williams is in a very specialized and regulated industry. And so it has a fairly high barrier to entry. You also find that the industry is resilient because demand is relatively stable. And you could even say that it may even be growing because Jamaica has an aging population. So we think the industry dynamics means that R.A Williams is well positioned. I think because of its size as well, it oddly mentioned that it's a quick and agile business, and because of that, it can continue growing more readily or even quicker than some of its larger peers. When you look to the financial aspects of the company, I mean, truly remarkable stuff. Revenue growth over the last 5 years, for example, has been in excess of 30% when you look at a compound annual growth rate. And profit before tax, even higher. So between 2020 and 2024, profit before tax grew at a compound annual growth rate of 42%. So you have revenue growth accelerating, you have profit growth accelerating. You also have a business that is mindful that with that growth, they have to steady the ship. Gross margins in that period of growth has been broadly stable in the mid 40%. And that is a real testament to the ability of the management team within the company to really manage the growth that they're experiencing and ensure that the margins are kept under control. And then when you look at the bottom line, what's the return to investors? Over the last 3 years, for example, the business has had a return on equity that has averaged over 30%. So truly profitable business. We think that the transaction itself, it has the best of both worlds. You get a business that is growing, it's accelerating growth, it is profitable, and then you also get a business that is well positioned in the marketplace and is making real meaningful impact in the lives of Jamaican people. And at Sagicor, we definitely align with that because it aligns with our mission of improving the lives of our Jamaican people.
All right, Shells wants to know, how can non-Sagicor investors send the money to you? So if you don't have a Sagicor, I guess, bank account or investment account, how do you get the money over to you at Sagicor?
Yeah, so you could use your own banking platform. So if you're the client of another bank, you can access the transfer feature from that bank and just ensure that you insert the payment details in Appendix 2 of the prospectus. In that appendix, it shows you the instructions that you're required to actually transfer the funds to participate in IPO.
So it just end up being a ACH or RTGS?
Yes, it's ACH, RTGS, as well as we also accept managers' checks.
Okay, I have another question. I thought I was done with the questions, but this one from Jason is pretty good, and this one is for you, Audley. So Jason is putting you on the spot. He says, with such high revenue growth, why is there a challenge in clearing the debt?
We have continued to service our debts, Jason. So I wouldn't say there is a challenge clearing the debt. We just don't want to carry the debt beyond this point because we believe, we have to think strategically when you're managing a business. And when you enter debt arrangements, they're normally entered for a period of time at agreed interest rates and so on. These interest rates and these agreements of the payment structure, they impact the business. You have to be paying out cash to service these debts. And so what I am trying to communicate to young potential investors like Jason is that our move to eliminate the debt at this time shouldn't be perceived as a bad thing. It's actually a good thing because you, Jason, will get an opportunity to own a stake in a pharmaceutical company that is growing and that is having an impact in making your family and your friends and your community more healthy. And at the same time, we are using your money that you give to us, Jason. In turn, you get a share in the business to eliminate monies that we owe financial institutions. With the elimination of that money, we no longer have interest payments and principals to service debt. What that means for you, Jason, is that we keep those funds, and every month when the business makes a profit, we no longer have to pay out these funds to service debt. So what it means is that we're able to hold back on funds that would normally be leaving the business to service debt. And it also means that on our books or accounting, every month we would have to normally expense whatever interest payments we make. And we no longer have to expend those interest payments. It means that that goes to our bottom line. So you, Jason, as an investor, will see increased profits in the business that you have invested in. So that's the move that we're trying to make. And we're hoping, Jason, that you will come on board through e-invest at Sagicor, put in your money and invest with R.A Williams and let us grow together and make Jamaica healthier.
And remember, Jason, it's a cash flow issue as well. You don't want to use up all your revenue, all your profits to be paying debt, because then that puts you in a position where you're strapped for cash just to run the company.
Exactly.
Right? Jason likes your answer. He says, okay, yes, that was clear. I like the sound of that. And he says, thank you. Stuart, Shells is back with another question for you. And it was about, okay, so she said transfer to what account? Is it listed in the prospectus?
So yes, it is listed in the prospectus. And I just want to say that we encourage persons to read the prospectus in full before submitting an application. But the account for the transfer, as well as the complete instructions as to how an investor can apply is in Appendix 2 of the prospectus.
Appendix 2. Let me see if I can find it for you, Shells. Trying to scroll to the end of the document. It's at the end, right?
Yep.
Appendix 2. All right, once I find it, I'll put it on screen a little bit later. But I want to wrap this segment of the interview right now, and then later on we can always, during the break, I can look for it for you, Shells, or you can go online as well, download the prospectus, scroll to Appendix 2, and find the account that you are supposed to invest it. That you're supposed to transfer the funds to. I want to thank Stuart for joining us and Audley for coming all the way to our studio. Thank you so much.
Thank you for having us, Kalilah.
And all the best when you open tomorrow.
Thank you.
Awesome stuff. All right, so it's time now for our poll question. And here's tonight's poll question. Will you be investing in the R.A Williams IPO? Pretty simple question this time. Here are your options. A, you already put in your order. B, nope, not my kind of investment. C, I'm still deciding. D, other. Leave a comment. You can take this poll on Twitter or on the community tab of my YouTube channel. You can also leave your comments in the chat. Are you going to be investing in the R.A Williams IPO? So guys, remember to hit that like button. Up next, we've got, not market recap yet. I want to encourage you to watch our interview with VM Wealth, because if you haven't seen it yet, I interviewed the CEO of VM Investments, Rez Berchenson, on their massive first quarter gains. And if you haven't seen it, here is a clip.
Oftentimes, we only look at stocks when the market is booming. If you read the literature, if you talk to any other brokers, if you read books about stock market investing, the best time to buy stocks is when nobody's buying stocks. I would say to you that if you were to start to accumulate a portfolio of stocks during 2024 and hold those for the medium term, I think that you're going to be rewarded handsomely. And that has been how markets work, year in, whether it be Jamaican market or international markets.
All right, now it's time for your market recap, and we've got our analyst, Julian Marsden, standing by with an outlook on the health sector. And he's also going to be looking at the R.A Williams IPO.
The JSE Combined Index was mostly flat last week. 119 stocks traded across the main and junior markets for the week ending Friday, July 12, 2024. 37 made gains, 69 lost value, and 13 stayed the same. 63 million shares changed hands on the Jamaican dollar market, valued at $166 million. Following a sale and acquisition of shares, CPJ ended the week as the JSE's most traded stock. The stock gained $1.08 to open the week at $11. Wigton traded at the second highest. The stock gained 11 cents to open Monday at $2.50. And Wigton rounded out last week's most traded with 18 million shares changing hands. The stock lost a cent to close the week at $1.06. Now let's see who had the biggest gains for the week. MPC Caribbean Clean Energy was the market's biggest gainer, up 24% to close the week at $108. Express Catering was the week's second biggest gainer, up 19%, and MPC Caribbean Clean Energy USD was up 15% to close the week at 70 cents US. On the losing side now, Sagicor Select Funds, Manufacturing and Distribution was the week's biggest loser. The stock lost 24% to open Monday at 63 cents. Innovative Energy Group was down 21%, and Egifocal lost 14% to close the week at 42 cents. Over on the Trinidad and Tobago Stock Exchange, the composite index gained 23 points or 2% last week. Massey was the most traded stock. The stock lost 12 cents to open Monday at $3.83 TT. GK was the biggest gain of the week. The stock was up 18%, starting the week at $3.89 TT. Over in the US, the Dow Jones and the S&P 500 were up around 1%, while the Nasdaq was mostly flat last week. Over at the pumps, the cost of 87 gas was up $1.95 last week, while 90 went up $1.97. Regular diesel prices were up $1.35, and low sulfur diesel went up by $1.45. In foreign exchange, it took an average $157.62 Jamaican to purchase $1 last Friday. Meanwhile, it took an average $115.66 Jamaican to purchase $1 Canadian. One British pound cost on average $203.58 Jamaican, and you could buy €1 for $173.12 Jamaican on average. Finally, on the crypto markets, Bitcoin prices were up 9% over the past 5 days, trading at $63,021 US on Monday, while Ethereum prices fell 9%, trading at $3,366 US on Monday.
Are you ready to step up social media marketing for your business? Get ready for the Summer Social Splash. Be one of the first 10 companies to sign up and get 60% off our influencer promotion package featuring yours truly. I'll come to your business and highlight your product or service to over 300,000 followers on Instagram, TikTok, and LinkedIn. But only 10 spots are available and it's first come, first serve. So don't wait too long to book this special offer. It's 60% off for the summer. Contact business@moneymediaja.com or call 876-498-6490 today. Let's get this money.
Disclaimer: this is not intended as financial advice. Please consult a licensed financial advisor before making investment decisions.
Welcome back. Welcome back. It's time now for the analyst. Let me see if I can take some more comments before I introduce our analyst for this evening. Okay. You guys just go ahead and read those yourself. People commenting about the platform and so on. So anyway, let me introduce our analyst for this evening. He's no stranger to the show. My guest tonight is Julian Morrison, founder of Wealth Watch JA. Welcome back, Julian.
Hey, Kalilah, how are you doing?
I'm good. You know, every time I see you on the show, all I can remember is when you gave us the tip about NVIDIA. Like 2 years ago, where NVIDIA is now.
Well,
I had never heard about it before you mentioned it.
Yeah, we mentioned a few others. We had a few dark horses on this show.
Crocs
was another one.
Crocs was another one. I remember
there are a couple
that
others. Well. There are a couple others. I can't remember all of them, but there are quite a few.
Of which I remember I said those ugly shoes, and I had so many negative things to say.
Yeah.
I 2 days ago bought my first pair of Crocs.
Yeah, it's just functionality.
I bought the slippers version though, not the clogs version, but
yeah, they've diversified and done so much. I think another one we had too was Monster. Monster really blew up as well. That was one that people didn't really look at either.
But the NVIDIA, man, every time I see you, I just remember, guys, you watch the show, Julian will make you rich.
Hopefully, prayer emoji.
All right, but tonight we are talking about the medical industry, the healthcare industry in Jamaica, and if it is a viable sector for investment, right? So let's look at the perception of healthcare as an investment-worthy sector. Is it similar to other industries? Because I kind of feel like a lot of people believe that healthcare shouldn't be for profit because it's necessary.
Okay, so there are two sides to the healthcare equation. There's a side of it being a social good, and there's a side of it being a business. And we have to think about why businesses are formed. So some entrepreneurs start businesses for the sole purpose of generating a profit, but the truth is there are some limitations as it relates to meeting healthcare needs. So generally speaking, healthcare is unique in that it is a sector that addresses needs. It addresses wants in the cosmetic space, but generally speaking, it addresses needs. So let's unpack that. If we're in a sector that is focused on addressing needs, and there's generally a funding challenge, either because of a lack of understanding from financial institutions, whether that be investment banks or commercial banks or other traditional providers of capital, number one, and two, many governments today in the Western Hemisphere are facing larger and larger budget constraints. So what you find is that after running deficits for several years, that's fiscal deficits for several years, meaning that these budgets have had to rely more and more on debt. The challenge is that many governments are not able to afford to fund the healthcare services sustainably on their own, which means that critical infrastructure becomes underfunded in a chronicle fashion. So when there's chronically underfunded healthcare infrastructure, it means that healthcare infrastructure starts to wear down in terms of quality. We've seen it in the hospital systems. You've seen it in a lack of fleet size in terms of ambulances. We've seen it in a lack of care, underfunded staff, in terms of low wages, etc., etc. So what that does is that it gives us a backdrop for the need for private capital to fill that funding gap in healthcare. And that's where investors come in. They provide private capital for various atmospheres, but right now we're talking about healthcare. So we've given some context, but let's take it a step further beyond the limited funding base of governments today in today's world, because inflation doesn't just affect consumers, it affects governments. So because of that funding limitation from governments, and because there is a basic need for healthcare in general, let's talk about the case for demand. So we've dealt with the funding limitations. Now let's talk a little bit about healthcare demand and the healthcare demand that is likely to come. So Stuart, in the previous segment, highlighted the importance of population aging, and not enough attention is drawn to this because it's a very unsexy topic. What is population aging? It means that for every person that dies, there aren't enough persons being born to replace those individuals. So what you find is that every time there's a distribution of the population, there are more and more persons bundling up under the older category and not the younger category, because populations always have what is called a distribution, and the age groups are not distributed evenly. So because there has been many years where what they call the replacement rate has been too low, so we haven't had a high enough birth rate to replace all the persons who have died. Most of the persons who are surviving are older, and that's a very simplified version of population aging that we can discuss, and it's a phenomenon in the Western Hemisphere. So it's in the US, it's in Canada, it's in the UK, and also affects the Caribbean. Jamaica is facing population aging. Barbados is actually worse than Jamaica in terms of population aging. So what does that mean? It means that the demand profile of the population will change, because it will give way or give rise to the development of the silver economy. That means that consumption patterns are going to change, so the way people spend changes. So what you find is that younger persons, they spend a larger share of their income on building because they're in the growth phase of life. So focus on acquisition of assets, focus on acquisition of not just material items, but educational attainment, more self-actualization. But as someone ages, the way they spend is different. So they focus more on succession, transferring of assets, also improving healthcare and trying to sustain one's lifespan. So as someone gets older, their probability of dying is higher. So a larger share of their wallet will go towards extending their lifespan. So what we're saying is, if a larger share of the population is aging and older persons tend to spend more, yeah, no, it's a dog, you call the dog M16, sorry. That's actually Spike. I'm kind of miserable tonight, but I soon deal with him. Sorry about that, guys. So, because a larger share of the population is aging and a larger share of persons who are aging spend more money on extending their lifespan, what you find is that healthcare spend overall in the Western Hemisphere is likely to grow outside of the factor of inflation and all of these things. So even if inflation wasn't an issue in the healthcare space, we would find that healthcare demand alone would push the demand for healthcare products and services in the future. So it's a large study in terms of the development of the silver economy. And what it does is that it creates a large bull case for healthcare-based investments, even though it's not a popular topic. There's also rising obesity rates. And what's interesting is that outside of population aging, more than 7 out of 10 causes of death of persons in the Western Hemisphere are all related to non-communicable diseases, meaning that heart attacks, we're dealing with complication around heart attacks, which is different from the heart attacks themselves, high blood pressure, cancer, all of these illnesses combined are responsible for the bulk of the deaths that happen in the Western Hemisphere. It's actually not violent crime. Violent crime is far down, like number 15. So in terms of 70% of the top 10, it's all tied to health-related issues. So all these things combined all create a very strong bull case for healthcare.
Yeah, so bottom line, there's a lot of money to be made in healthcare. I like that you mentioned the silver economy as one that we should be paying attention to. I remember as well, Julian, I think it was probably end of last year, during one of our year-end reviews, either last year or the year before, I was looking at the top 10 companies with the highest return in the US, and like 5 of them were in healthcare.
For sure, Kalilah. Yes. So even outside of what we call the COVID trade, where many companies significantly benefited from COVID spending by way of vaccines and, of course, other services that would have seen a demand in spike in demand, I should say. We're talking about a larger trend. So we've spoken about the funding gap, we've spoken about the demographic shift, we've spoken about the health issues that are already underway, which we expect to continue to deteriorate. Why is that? What we've noticed is that as technology advances and we spend more and more time inside, we have a higher incidence of healthcare-related incidences. So what you'll have is a deterioration in mental health. Persons aren't spending enough time with each other. You have higher cases of depression being reported, greater complications around personality disorders. Of course, persons are not exercising enough in general. So all of these things combined create a myriad of opportunities. But what are the main avenues for persons to actually take advantage or at least consider healthcare investing? So there's big pharma. So these would be the providers of medicines, pharmaceutical products and services like Eli Lilly, CVS Health, and also United Healthcare. These are companies that are listed on the international market. There's also Pfizer. There are also medical device manufacturers. And also there is the biotechnology space. So in biotech, it would be an earlier stage of investing than in big pharma. So big pharma focuses on medicines that have been approved by the FDA, the Food and Drug Administration in the US, that have passed clinical trials and have been approved. So these are late stage medicines, but there are medicines that are not yet approved. And what investors do sometimes is to take bets on medicines that can be approved later on. So for context, Indus Pharma actually has a medicine that is it's actually in the pipeline. It's pending approval by the FDA. So Indus Pharma generally would be our equivalent of big pharma, but it also has a biotechnology aspect to it, in that there are medicines that are not yet approved in the US market, but they might be approved in other markets. And when these medicines are approved in the US, it means that it opens up a large total addressable market for this product. Consumers that have higher spending capacity but are looking for cheaper healthcare solutions, because we know healthcare costs in the US are actually high compared to other territories in terms of the per capita spend. So what we have is individuals who have high income per capita who are looking for cheap healthcare services. And that is actually a bull case for healthcare tourism in Jamaica, because what you find is that many of the doctors that are migrating to the US healthcare system are in Jamaica. What if more of those medical professionals had practices that allowed similar care to be offered in Jamaica, such that persons who come to Jamaica to vacation can also come to Jamaica to get treatment? What if those persons could recover from a surgery on a beach? So this is another avenue. So what if someone doesn't want to take exposure in stocks, but they want to be an investor in, for example, an eye care business? Or what if they want to co-invest in a medical practice? So these are different avenues individuals can consider. And as we mentioned, it's a long-term trend. It's not something that is a flash in the pan. It's not something that is transitory, but it's here to stay, and it has a lot to do with the world tomorrow. So just to put the caveat out there, I don't think that healthcare investments are for everybody necessarily. Like all other investments, there are risks involved, and persons should only invest in what they understand. And sometimes healthcare can be a bit dense because it's so scientific, but one can look at co-investing. So what if you understand the economics of healthcare investing? So for example, look at R.A Williams. R.A Williams, they are a business that generally sells to businesses. They are a distributor, and they're what we call B2B. Their strength is that they can form long-term relationships and scale by sustaining those long-term relationships, have repeat customers, and maybe acquire smaller entities that offer a similar service or operate in a similar space, or maybe operate a similar space in a different Caribbean territory. So they can grow inorganically, right? But that's different from a Fontana, for argument's sake, because Fontana is not necessarily B2B, they're B2C. So they sell directly to consumers. So it's really about understanding not just, okay, this entity sells medicines or they sell medication, but where do they sit in the supply chain? What is it that they do in terms of creating value for customers, and what generates the most volume and what generates the most value in terms of profit margins? What we'll find is that the entities that have the highest profit margins are the entities that make the medicines or have a relationship with those that make the medicines. Because that way, right?
So like a R.A Williams, a distributor.
Well, yes. I would say that if it is that R.A Williams had a sister company that made medicines, their margins would be bigger. If you just distribute alone, then their margins would be smaller because it is
so like a Lasco then, because Lasco makes some of the generics and they sell.
Yes, and even Indus Pharma, because Indus Pharma has Bioprist, which is in India. So Bioprist is a sister company that's in India that would make the medicine for cheap and then sell it in Jamaica. And then because the sister company, the markup wouldn't be as large. So that's the key to understanding healthcare. It's not just understanding the science of healthcare, but also the economics of healthcare. So I always get into a debate with my friends about it.
So Sean says this is why he can't understand what's causing medical stocks to struggle to grow on the JSE.
Boy, Sean, it's really because healthcare is not sexy. It's a bit dense. It can be seen as academic. And of course, many persons are not enticed by by that. Who wants to read medical journals? Anyway, What
Yeah,
I'll
because
say is that
you have Indies, you have MDS, you have,
there's,
was it
right,
Apex? Which one was the one, the
is
radiology that
Image
recently
Plus.
listed? You
Image
have
Plus.
even Fontana, which strangely enough, even though they're Fontana Pharmacy, I don't think of them as a pharmacy. Like when I,
Yeah, because
because they sell so
they
many
know it's
other
not
things.
sexy. They
It's
know
not
it's
the
not
first thing
sexy.
that comes. Like one, the other day, I had a prescription to fill, and it didn't even occur to me to go to Fontana, even though they're a pharmacy.
Wow,
And
talking
Fontana is
about,
closer to where I live, because
yeah,
in my
talking
mind,
about
it's
being
a
an element
department
of this.
store. But yeah, so it, like you said, not necessarily sexy to invest in healthcare, but the profits are there.
Yes, and some of these businesses have very high free cash flow. So what that means is when we look at the operating cash flow a business has and how much is needed to reinvest in that business to keep it growing or keep it running at a given rate of production, we want to see that the business is not very capital thirsty, because some businesses are more thirsty for capital than others based on the model. So what do I mean? There are some businesses that are able to generate, let's say, a 10% return on capital, but the need for reinvestment is very low. But for some businesses to generate the same return on capital, the need for reinvestment is high. So what we find is that businesses that have very high needs for reinvestment, or businesses that are more capital thirsty, they have less free cash flow. And businesses that have less free cash flow have a smaller ability to pay a dividend. So what we like is businesses that have high free cash flow, strong competitive advantage, and that will allow them to pay dividends sustainably and even grow that dividend over time. Because we want to invest in businesses that borrow because they want to borrow and not because they have to borrow. When you have low free cash flow, it means that you're borrowing out of desperation, not by choice. So, for instance, when we look at a Wisinco or when we look at a Last B, let's stick to healthcare. Okay, let's look at Last B. Let us look at, for example, Image Plus. I mean, I know Image Plus is doing a very large amount of expansion in terms of physical expansion. But prior to that, and in a more normalized fashion or context, the business has very high free cash flow potential, which means that the capacity to pay dividends and the capacity to make money without borrowing continuously is very high. So we like businesses like that. And by the same token, those businesses have the ability to chart their own course and to make acquisitions in a way that is more comfortable. Because if a business is struggling with debt just to keep growing, then the ability to grow inorganically, meaning to acquire other businesses, is very difficult. It's more constrained because more of your budget is taken up by borrowings. I think R.A Williams is one of those businesses that can have high free cash flow ability once they keep their costs under control. I think some of the challenges that we mentioned earlier around working capital was really sensitive to what was happening at the time. So a business like R.A Williams is very sensitive to supply chains because they are a distributor. They don't produce that much. So what it means is that if they can't get product in very quickly, they have nothing to sell.
Mm-hmm.
So if it is that there are supply chain challenges, i.e. supply chain challenges, so if you have a difficulty getting supply and it's threatening the business, you'll have to buy extra inventory.
Yeah, they spoke about that at length in the prospectus, and I was asking Audley about it as well, because that happened during COVID. They had supply chain issues. They couldn't get inventory. Panama Canal dry up. Nothing is coming in. It was a nightmare. And so their solution to that was to have more inventory on hand.
Yeah, they don't have any choice because, again, if you don't have any product to sell, you don't have a business.
Which takes a lot more money, because now
Yeah.
you have to buy all this inventory up front.
And you won't be able to collect cash, from your customers, or you won't be able to collect cash from your customers fast enough to offset all that extra inventory that you had to buy to stay alive. because of the supply issue. So what will suffice in the interim is to borrow more, because not all of the cash is going to come from just selling the product. So a lot of times you have to put these things into context. The truth is the business was satisfying a funding gap because of what was happening on the back end. It's not as if they were just borrowing for irresponsible purposes. So I think that the debt burden they have, once that is normalized by way of using the proceeds to wipe out the debt, then we should see a much better performance, given that all else remains in place in terms of management controls.
You have a lot. We have a few questions for you here, Julian. Christopher, well, this one is a comment. I think when CariMed comes to market, they will be a game changer. CariMed has plans to list? I don't remember if I heard about that. Learn, Grow, Invest. They do? Learn, Grow, Invest wanted to know what's the outlook for the imaging companies on the JSC?
Okay.
That's Apex and, well, what's the parent company called
Apex
again?
and Elite.
Elite, yes.
So the outlook for imaging companies is in line with our previous discussion in terms of looking at healthcare infrastructure and healthcare infrastructure being underfunded. So there's a great need for imaging services because the hospitals and the medical centers can't produce all of the images on their own. So they have to outsource because of the funding gap that is in the public healthcare system. So what happens is that these hospitals and medical centers will outsource to an Elite or outsource to an image press to do the imaging for them and send the feedback to the hospitals. So because of population aging, because of the issues around non-communicable diseases and how prominent they are in terms of cause of death in the territories in the Western Hemisphere, imaging is extremely important and it's needed for almost everything. The challenge, however, is that many of the machines run on voltage that was not designed for the Caribbean. Many of these machines are from Europe, or they're built for markets that run on a different voltage. So when they start running on the Jamaican current, sometimes the machines trip out and cause machine failure.
Oh, so it mash up the machine.
Right, because the machines were not built for our voltage system. I'm sorry for the engineers on the call, and I'm not using the right terminology, please forgive me, but it's really an issue of voltage that has caused a lot of the challenges around machine failure, and it really has to be managed. So separate and apart from the sheer volume and the demand that's coming in, there's a discrepancy as it relates to the voltage and what the machines are made for. So there's a way to actually adjust the machine so that it can adjust to the voltage that we have in the country. But a lot of the times, it's an afterthought. Nobody really thinks about voltage really. You kind of just want the machine to work, and it will work for a period. But if it's not built for that grid, then it's only a matter of time before the machines fail. Other challenges: lack of expertise around servicing the machine. So all the expertise is overseas. So when a machine fails, the fix is not quick because there aren't many persons who have the parts or the understanding locally to actually fix the machines or service them. And you can't really freestyle when you're fixing medical equipment. You have to know what you're doing. So those are some of the issues. But once imaging businesses can get that under control or minimize machine failure and are able to manage. So there are two things. There's a business of the practice. No, there's a medical side of the practice, and then there's a business of the practice. Once an imaging business, a radiology business can manage both, then they tend to do better. What I've found is that radiology businesses that master the medical side of the practice, but not the business side of the practice, tend to suffer. So they take longer to recover from machine failure, and their numbers tend to look worse than businesses that, or practices, I should say, that have the ability to manage both. So in my opinion, I think Image Plus has struck a better balance. They have been able to have a good mix of business managers and medical professionals working together, as opposed to doctors doing everything. Because there's a difference between having business persons on the board and having business persons in management. Because the board is not there every day, but managers are there every day. So that is what I get into this debate all the time with my colleagues. That's why sometimes you have to look beyond the numbers and understand the economics of the business and the strengths and weaknesses from a qualitative standpoint. So, for example, Keisha Anderson from Image Plus, she has a business mindset. She would have been hitting targets for many years for JMB when she was country manager of JMB for Jamaica, the Jamaica territory. So she knows what it is like to manage large teams, manage personalities, outfires as it relates to customer service, all of those things. And then there's Dr. Bridgewater working on the back end, who is a medical professional with deep expertise. So you have the two minds meeting. That's where the deficit is for Elite. Elite doesn't have a Keisha. Elite is just doctors. With all due respect, I mean, there's business acumen, but it's at the board level. It's not at the management level. So they're brilliant doctors, but there's more to a listed
Running a business
healthcare vehicle than being a brilliant doctor.
I say it all the time, especially when I'm talking to the members of Money Mission and we're doing money mentorship. Like, knowing how to do a particular thing doesn't mean you can run a business that does that thing. Two completely different skill sets.
Yeah, I mean, I really hope, really and truly, it's the machine failures that has been just challenging Elite. But I think to some extent, the systems that could have been put in place, and I don't mean systems from the systems within the context of the machine, but systems within the context of the business. Some of those blind spots couldn't have been dealt with by just the doctors alone. That's why collaboration is important. We can make the same case for GUS. I just think that GUS had a funding mix that was just wrong. It was too much debt. When you look at even the IPO and then how much GUS borrowed in the next 3 financial years, the debt to equity mix was just out of whack, because when you have a startup, you need more patient capital. And a lot of the capital was impatient. So when the business should have been starting to hit its stride, it's just like track and field. I don't know all the track and field fans that are on the call, but just bear with me. So
I'm assuming you're in your track and you're in your Jamaica colors.
Man, Jamaica.
You are ready for Paris.
Yeah, that's crazy. Yeah. Okay. Actually, this is by chance, but it must be serendipitous. So when you're starting track and field and get ready, set, go. Runners actually go through a certain cycle, They don't peak at the start of the race. So right as they move off, they have a charge phase where they're pushing and pushing and pushing and pushing and pushing in terms of how much energy they're generating. And they're coming up a curve in terms of their speed. So they're coming up rapidly. They don't peak until they reach about 50 to 60% of the distance, I'm talking about 100 to 200 meter sprint now. I'm not talking about marathon races. So it's just like a business. It's coming up a curve. And when GUS was supposed to be hitting its stride, it had to be using all those internal cash flows to just pay it, so it couldn't reinvest. So the debt that was on top of GUS was just gobbling all of its cash resources such that it couldn't even grow. So the truth is, the debt either needed to be structured in such a way that was more gradual or more staggered or further out in terms of its maturity profile, or it should have been a funding package that just allowed business more breathing room, so more equity, and probably some prefs that were convertible, or just a different funding mix that matched the business model. So the funding didn't match the business model, and that is what killed GUS. GUS could have been successful, and GUS is needed. It's actually a needed vehicle in terms of the business case. But sometimes a business case can be killed by the wrong capital structure. And it's very unfortunate. It's like the failure of that business is capital structure one-on-one. So I say all of this to say healthcare is everything combined. It's not just a science. And sometimes it can be close-minded to say, boy, yo, me never pass by you, you know. So when a business about that, you know, Julian, I talk about healthcare thing, yo, that not sound good. Tell me about some patty or some juice or whatever. But there's opportunity. You can co-invest with experts and still be able to do well. Again, you still need to understand the economics of the business, but the economics of the business need to play with the science. So it's both of them combined. And again, even with all of this said, healthcare is still not for everybody. The risks are real. Like even when I spoke about biotechnology earlier, biotech businesses are very risky. They have a very high failure rate. It's just like venture capital. Venture capital is very risky.
So I'm going to ask this last question from Harold. Put you on the spot because I don't know if you did these calculations, but Harold wants to know what's a fair market price for R.A Williams based on your calculations, barring market sentiment. Is the $1 a fair market price?
Okay, so I'll put it into context. First of all, I didn't value it. I didn't value R.A Williams, meaning that based on my schedule. Hold on a second.
Put those dogs in check. So while Julian puts the dogs in check, let me take a few more comments. Sean wanted to know.
Yeah, M16 was going a bit crazy a while ago.
Okay. So all right, so the price.
Right. So looking at it, it might seem as if it's priced rich. It's being listed at a trailing PE that is far above what is on the junior market in terms of the average. However, when we put into context that the debt is going to be reduced significantly, and also the business won't be paying any taxes because it's a junior market firm, it means that the removal of the debt, or not removal, but the reduction of the debt by about 60%, let's just call it 60%. If debt is reduced by 60% and the company will no longer pay taxes, then it means that the upside for earnings is far bigger. Because more of the operating revenues will flow to the bottom line. So what that will do is increase the forward PE. Sorry, reduce the forward PE because earnings is going to be bigger in the future than it is right now. Because right now, they're paying taxes, the full tax rate, corporate tax rate, and they would be paying X amount on debt because of what we discussed earlier. They need to borrow extra to fill the funding gap due to the supply chain issues. But when we reverse engineer that and remove those two items and adjust it, what you find is a far more attractive valuation in the future. So what we need to think about is how will the business look post-listing, not just from the standpoint of the entity winning more contracts, but the significant reduction of debt and the removal of the taxes for the first 5 years. So because of that, I think it's worth looking into. I can't give you a fair price because I didn't value it, as I said, but it's just food for thought.
Okay, thank you so much. Ingrid says you sound like a real genius nerd.
I'm not a genius.
But you didn't deny the nerd part. That's funny.
Yeah, I can't really deny that though, because long story. Actually, I'll tell you something funny. So originally, I was poised to do medicine. You know, when I was going to sixth form, and my dad, you know, he pulled me one side and he said, "Boy, Julian, there's a subject that if you master it, it will give you everything you want in the world. And that subject is economics." And at the time, we were going through the 2008 recession, and everybody was talking about the economy and all of these things. And I really gave the subject a chance. I followed my dad's advice, and the rest is history. It just took me down this rabbit hole. So what I've done is to combine two of my interests: economics on one side and science on the other hand, more so human science, and really combining the two. But
And
I'm
it's worked.
definitely not a
It's
genius.
worked.
Don't let me let you down.
We definitely appreciate you. You can go deal with your dogs, Julian. Let's not Orville says put on the muzzle.
No man, what
Farmer says it's
happened?
a dog fight.
No man, what happened is that you see
Dr.
the
Doom.
dogs have they talk, you know, they talk to each other and they have neighbors. Just the way we talk to our neighbors, they talk to their neighbors. So they have their own dog conversation right now. So dog will say, boy, you hear about R.A Williams or whatever they're talking about. So you don't get involved in dog business. That's dog business.
All right. Where my
Yeah.
dog's at. Thank you so
Yeah.
much, Julian. This was a great conversation. I love it. So we're going to take our final break and come back with your comments.
Butterfly in the sky. What? I can go twice as high.
If you've always wanted to invest in an IPO, but you weren't sure what to look for, take my Investing for Beginners Masterclass. Comment investing and I'll send you the link. Let's get this money. Welcome back. Welcome back. So we've come to the end of this week's show. Thanks again to CEO of R.A Williams, Audley Reed, and Stuart South, who is the Sagicor Investments Manager for Capital Markets. Also our analyst, Julian Morrison, for joining us. Make sure you guys like the video, subscribe to this channel, and share with a friend. You can also subscribe to the newsletter at KalilahReynolds.com/newsletter. We've officially launched the Money Dictionary. If you remember the Financial Terms Made Simple document, well, Money Dictionary is more updated, more modern version of that. It's the new and improved pocket guide that makes financial terms easier to understand, and we've created it just for you. And guess what? It's a free download available at themoneydictionary.com. We have the link in the description. At this point, guys, I need to warn you about something. So there is an article floating around using screenshots from this show. There's a whole fake transcript claiming to be from Taking Stock with a fake interview between me and Michael Leachin. And they used screenshots from Taking Stock. And then they wrote this whole transcript of a purported discussion between me and Michael Leachin. And the whole thing is fake. And they put it on, so the banner says it's an article from the Star newspaper. But when you look at the link, it's not the Star. It's clearly fake. And so in this, I don't know how many of you have seen it. Let me know in the comments if you have. But in this fake transcript, fake interview between me and Michael Leachin, apparently he was telling me about some cryptocurrency investment. And he took my phone, which is obviously that can't be true because the show is virtual. Audley is the first in-studio guest that we've had on the show in recent times since we started. And so in the article, it says that Leachin took my phone and invested 40,000, I assume Jamaican dollars, on my phone in this whatever thing that he's using. And by the end of the show, the 40,000 was 46,000. And then he claimed that he didn't mean to tell me that on air, that we should delete that part. And then we got a call from the Bank of Jamaica in the middle of the show saying to stop the interview because the people shouldn't know this stuff. It's crazy. Like, it's a whole fake transcript. And the point of it is to scam people into clicking a link in the story saying that this is the thing that Leachin uses and that he told me about it on Taking Stock. They use the name of the show and screenshots from the show, and that because we're doing it, so we're supposed to be, they're using us to give credibility to this scam, and because we're doing it, you should do it too. I won't even call the name of it, but if you've seen it, just let people know that it is fake, it is a scam, and do not be fooled. I say it 1,000,000 times. I am not a licensed financial advisor. And even if I was, I'm not your licensed financial advisor. I do not invest on behalf of people. And just know when something just looks odd. Because I got that message. I got the link a couple days ago and I never clicked on it because the person who sent it to me sent it without context. They didn't tell me what was in the link. That in the article, I didn't know that I was in the article. but the link just looked suspicious, so I never clicked it. It was like, you know, normally a news article would have, let's say, thegleaner.com / the name of the article, the name of the story. Even on my website might be KalilahReynolds.com / the name of the story. But this one was a long link with a lot of letters and a lot of characters. I'm like, I'm not clicking that. Only to find out that it took you to a page with a whole fake interview between me and Lee Chin. And it's it's well written. So usually the first red flag is that the English is very poor. The spelling is very poor. The grammar is very poor. You can tell that this is not me talking, right? But this case, it was very well written. I was not pleasantly surprised, appalled and surprised that, you know, they took the effort. It was a lengthy article. It seemed very convincing, but the giveaway is the link. The link looks suspicious, and it purports to be an article published on the Star's website, but when you look at the link, it is not the Star. It gives you a completely different link, and that should be your red flag. But guys, just know that if something seems too good to be true, it definitely is. A few people in the comments saying they saw it. Shell says the scammers going hard. Matter of fact, I'm going to show you what it looks like to show you just how bad it is and the lengths that these people are going to. Let me find it. I'm going to share screen because you guys need to see this. This is crazy. Oh, my TV timed out. Share screen. Here we go. It says the Central Bank of Jamaica sues Michael Lee Chin over statements he made on live television. This is completely fake, guys. Live on air, Michael Lee Chin regretted revealing the truth, but it was already too late. The scandal erupted during a live broadcast when he accidentally revealed his secret on the program. Fortunately, we were able to persuade the director of Taking Stock to give us a copy of the recording of this program. So they're claiming that it was deleted. So if you're trying to find it on the channel, it's because we deleted it, right? If you've had a chance to read this article, keep in mind that it may soon be deleted, or as has happened with broadcasting. So read this article instead and check out the link provided to us by Michael Lee Chin himself. Interesting. And then here's a screenshot of him on our show. So my logo there, the old KRM logo, deleted interview with Michael Lee Chin. And he says, I'll tell you something, you don't have to work hard to be rich. And when you realize that, you start handling your money a lot easier. And then I allegedly say, it's easy to say when you're a celebrity. Normal people suffer on a daily basis to feed their families. And you know what? We never have enough money. We always want more. And he says, do you think I don't work hard enough, or that I'm not like most Jamaicans? Believe me, if I lived on one salary, I'd never have become a millionaire. When someone tells me I'm just lucky, I laugh in their face because today there's everything on the internet to get rich without leaving your couch. Then I say, allegedly, so you're saying that anyone can make money like you? I don't believe it. And then there's an editorial note that says, you could just see how angry Michael Lee Chin was about the sentence. He started arguing with the host and accidentally blabbed about the loophole that made him rich. Then he says, you don't realize me? Give me $40,000 and with this platform, I'll make $1 million in 12 to 15 weeks. Then I say, I've heard there's software that uses AI to trade cryptocurrencies. Now all our viewers know what it's called too. And then he says, I'm willing to pay $3 million. No, if you cut that part of the rerun, I didn't mean that. And then another screenshot from the show. And then he says, there's no need to make me into a monster. I'll tell you how to make money, but first give me your phone and let me invest $40,000. And it says Kalilah Reynolds handed his smartphone to Michael Lee Chin, who then signed up for the project via this link. 5 minutes later, Michael Lee Chin returned the phone to her. And then he says that he just signed up for the platform, blah, blah, blah. I said, it sounds great. And then he says, 20 minutes ago, I took your phone, registered on the platform, and made a minimum deposit, which is only $40,000. Now open the app and see how much you've been able to earn in such a short time. And then I opened my app, and I was amazed because within 20 minutes, the program had completed 3 transactions. the balance rose from $40,000 to $46,000. Then they have my picture here and this screenshot of something that is completely fake beside my picture. And I'm here talking about how incredible this is. And it goes on and on and on. Like it's supposed to be a whole transcript of an interview that they completely made up. And then it goes on to say that their own investigative journalist says our editor decided to personally check the platform and wrote a detailed report. And their investigative journalist is now giving a day-by-day blow of what happened through investing. And then, where was the part about the BOJ calling and telling us to cut the interview? And then here's a bank statement from the BOJ. Now, you all know. Boy, it's just the lengths they go to. The lengths they go to. Fake news. Fake news, guys. Don't fall for these scams, please. Please. I just had to bring that to your attention. Don't realize but that's worse than patois. Finessing Finance says, I'm lost. You should be. It's a whole fake interview that they were trying to use our platform, taking stock, to scam people. David says, real money we speak about over here. Shell says, never click link, even shorten URL. Too many people just share links with their contacts. Scammers are going hard after you. Nicole says, what in the world? Roger says, Jaja, trust me, they are not playing. A lot of stuff going on around here. So make sure that you follow on the legitimate platforms. Email is best. KalilahReynolds.com/newsletter is where you get all our official updates. So that's our show for today. Thank you so much for joining. Tell a friend to watch Taking Stock. I heard there was an IPO in Trinidad today. Solace IPO. They're a company that's similar to PBS here in Jamaica. I'm going to look into it and see what we can find for our Trini viewers. You can check that one out. I believe it closes in August, like early August. So you can check out the Solace IPO over on the TTSC. And then here in Jamaica, of course, you have R.A. Williams, which opens tomorrow. It's a small one, junior market. So get your applications in early if you are interested. Thanks so much again for joining us. I'm going to see you again next week. Until then, let's get this money.
Let's get this money.